And again, we have our guests jumping around here on the set as we make a seat change here. We have the very lithe and agile Mr. Roger Schlesinger. He's also known as the Mortgage Minute Guy. Hey, Roger.
Hi, Don.
How you doing?
I'm doing fine. How are you?
I'm good. I'm going to let you do most of the talking, as you can tell.
I can't understand why.
Because I'm probably about 30 seconds away from running out of voice or gas here. But the last couple of weeks, we've been talking about a remarkable mortgage product that you've been very excited about, a fixed-rate FHA loan up to conforming loan limits for 15 years at 2.75%. You were saying, call me now because it may disappear at any moment. Where do we stand with that?
Well, we still have it, believe it or not. It's not quite as good a loan as it was, but for us. But it's a great loan for the consumer, and that's the whole reason we do it anyway. But today, you know, I'd like to talk about FHA and compare it to VA loans. FHA is available to all Americans. VA is available to all Americans who've served in the military or are currently serving in the military. And they're almost good enough that you might want to enlist to get them. Maybe not that good, but pretty doggone good. But there is a difference. The difference is FHA loans are just a tad less expensive than VA loans. But FHA loans come with mortgage insurance, at least mortgage insurance if you're 78% loan to value or higher, but mortgage insurance for 30 or for 5 years regardless of where you are. VA comes with no mortgage insurance. When you want to buy a house with a VA loan up to conforming loan limits, 0 down. FHA, 3.5% down. Not that big a difference.
No.
Both of them are assumable. So that makes it good. And when it comes to cash out, we can go to 85% with FHA. We can go probably a little above 90 with a VA loan. Wow. So there is some benefits for the military, and there's some benefits for the Americans, just in the way of slightly lower rates. For instance, the 2.75 15-year loan is an FHA loan with 0 points. The corresponding loan in VA is 3% with 0 points. For FHA jumbos, we're at 3.25 with 0 points on the 15-year.
Now, you mentioned, the difference between VA and FHA loans, and you said both loans are assumable. For someone who's buying a property that has a VA loan on it, do they have to be a veteran to assume a VA loan?
No, you do not have to be a veteran. You can assume. I actually assumed the VA loan one time.
Okay.
Yeah.
Well, I can remember, back many years ago when I bought my first house, the big thing back then, because interest rates were like 12, 13%, was trying to find an assumable loan. And I can recall, when I bought my first house, I assumed a 10% loan and thought I'd hit the jackpot. I hadn't really heard the term assumable loans in the last several years until you started talking about them really in the last few weeks.
Right. And quite frankly, if you could live with the mortgage insurance, and you put it as part of your strategy and bought an FHA house with 3.5% down, you would have mortgage insurance for 5 years. And the mortgage insurance is 1.1% a month. So you got to figure if you're going to get in on a 30-year fix at around 3.5, it's really 4.5. But at the end of 5 years, if you paid it down to 78%, added some extra dollars, or put a lump sum in to get it down to 78%, and then wanted to sell the house, you would be selling at then 25-year fixed rate at 3.5% without mortgage insurance, and that would make your house so much more valuable, because by then we're probably going to be looking again at the 6 or 7% range.
Well, I have a question for you, because I know the Fed came out and said they were going to leave interest rates alone until about the middle of 2014, but I know that doesn't mean people should wait until the beginning of 2014 to do anything if they're so inclined to get something done.
Well, for 2 reasons. Number one, the Fed does not set mortgage rates. The only rate that the Fed is talking about is the overnight lending rate between banks or the rediscount rate, and I think that is the rediscount rate, or the federal funds rate. And that's the 2 rates they set. It does influence all rates, but many times when you think, wow, the Fed said this and it's going to happen, mortgage rates start backing up, and so the bond rates. And then other times when you think, boy, this is terrible for bonds, bonds start rallying and mortgage rates come down.
Almost out of time. Very quickly, tell us how people can get in touch with you. Pick your brain.
866-288-0088, or you can go to mortgageminute.com, and it says find a mortgage consultant. That's our little 3-question app. name, how do we reach you, and what state your property's in.
MortgageMinuteGuy.com. Roger Schlesinger, the Mortgage Minute Guy. Thanks so much.
Thank you.